Welcome to the channel Get Rich. Today we are going to look into a company called Zensar Technologies Limited. So we are going to look into a short update on Zensar Technology Limited, what are they doing and where are their revenues are coming from, and then we are going to look into their detailed financial statements and also their valuation for the next 1 and 2 year. So let's get started. So first, let's see some highlights about Zensar Technology Limited. So it has a revenue of about $147.1 million in the last quarter, and then it has a profit margin of 8.2%, and they have cash in hand is $168 million, and they have a headcount of about 10,000 people, and they have $125 million wins in the recent quarter. And then if you look into their snapshot of this particular company, they have a market cap of around 7,759 crores, and their stock PE is around 20.7, and their return on capital employed is 22.2%. And then if you look into the return on equity, it's 14.9%. And then if you look into their book value, which is 110, so price to book is somewhere around 3.4. And if you look into their debt to equity, it's 0.13. It's very minimal. That's good. And then if you look into their price to sales, it's 1.96. That's also not that much when compared to the growth. We have to still look into the growth. And the dividend yield is about 1.05%. And then the current ratio is 2.46%. That's good. And then if you look into their promoter holding, it's 49.1%. And if you look into their price chart, so in March 2020 it was about 100 rupees, and it rallied up to 550 rupees, and then currently it's trading somewhere around 340 rupees range. If you look into their P ratio, so their P ratio currently standing around 20 P. They even reached 40 P at some point, but then their average P is somewhere around 12 to 13. That's what their historic average P. But even they shot up to 25, 27 at some point, and then it came down to around 5 or 6 during the March corona crisis. And if you look into their revenue breakdown, where are their revenues are coming from, what are they doing? So if you look into their revenue by service offering, so they have digital and application services. They have around 82.3% in the recent quarter from digital and application services. So digital services is about 60%, and then core application services is about 22.5%. And if you look into their other segment, which is digital foundation services, which is around 17.7%, and out of that, cloud digital led next generation is about 11.7%, and core infrastructure services is about 6%. If you look into the revenue by vertical, so which are the verticals, which are the industries their revenues are getting from. So about 36.7% is from high tech companies, and then 17.6% from insurance, 16% from consumer services, 14% from banking, 9.7% from manufacturing, 5.8% from emerging technologies. And if you look at their quarterly growth, year over year quarterly growth, so if you look into that, so high tech it's about 10%, insurance is 8.9%, consumer services is 26%, banking is 76.5%. So their banking vertical is gaining momentum, and then their emerging is 78.6%, but then their base is pretty small. And if you look into their revenue by geography, where are their revenues coming from? So it's mostly from US. 71% of their revenue is coming from US, 18% is coming from Europe, and 11.1% is coming from Africa. And if you look at their quarterly year-over-year growth, so in US it's about 20.8%, Europe 23.7%, Africa is 8.3%. So they are growing a bit faster in Europe, but overall it's about 21 to 23%. And if you look into their business offering, what are their key business offerings? So in the services, they have analytics, application transformation, digital foundation, digital experience, testing, unified digital commerce. They are doing a lot of digital services business. And in the solutions, they have digital supply chain, enterprise analytics, customer experience transformation, living AI. So they are also doing connected autonomous cloud, connected experience, and their customers are from several different industries segment. So if you look at their key winnings or key wins, what are they doing with their customers? So they have like guide wire systems implementation for a large PNC insurance company, and then modernizing supply chain application on cloud for a leading American retailer. So they're also doing a re-engineering for a European entertainment firm. So they're also a strategic partner for cloud and data engineering for a leading retailer in Africa. They're also doing digital workplace management for a large American drug wholesaler. So they're also doing design and experience services for a non-profit organization. So these are the different customers. They are doing different projects. They are working with their customers. If you look at their significant wins, some of the significant wins in quarter 3 financial 2022. So they are doing application development services mandate for a large US technology company, enterprise application services for the large US not for profit, and also they are doing advanced engineering services for an international financial institution based in the UK. And they also recently acquired, not recently, a year ago, so they acquired like M3BI on July 14th, 2021. So they have like 445 professionals across the US and India. So they have architects, business analysts, and data engineering solution specialists, and also yeah, they have added market clients to Zensar's portfolio from BFSI and other verticals. And also, if you look into their capacities, for example, so they have data engineering and advanced analytics, advanced engineering and experience services, artificial intelligence and machine learning, product and platform engineering services. If you look into there, some of the latest technology they are working on, so they are doing like a project which is advanced AI to accelerate the adoption of metaverse in large enterprises. If you don't know what is metaverse, it's like a virtual world. A lot of companies are starting to working on NFTs, metaverse, and so on. So metaverse, yeah, Facebook or Meta, they are even changed their name to Facebook, name from Facebook to Meta. So it's named after based on metaverse. They are going big on metaverse, Facebook. So there are a lot of potential in metaverse. So they are doing a project in there. So that's pretty good. So if you look at their research and innovation centers and labs, so they work with a client on automatic application of granular physical properties on metaverse objects. So because metaverse is a virtual world, and then you can have a virtual properties like in the real world. So they were doing that particular research to give them a realistic touch. So this work involves deep learning methods to render realistic 3D imaging which can be easily consumed by any XR environment. So it reduces the need for human efforts in manually detecting properties for these objects. So they are doing a lot of interesting projects in there. And the next one is a case study. So it's also with machine learning describing insights and casual analysis to reduce first time fix right failure. So they are partnered with Fortune 100 communication and IT industry leader. So they do with machine learning, and they do a lot of analysis. So they also have supply chain teams can use a multi-dimensional simulator to predict chances of failure and take proactive precautionary actions. So these are another project they are working with machine learning. And then they are also doing digital product transformation on cloud. So they partnered with the FTSE 100 diversified global leader in sustainable technologies to transform their product line to high velocity architecture on cloud. So that's also, these are the projects they are working on as case studies they mentioned. And if you look at some of the awards they got, so it's they received 4 awards under the digital business solution services partner. So they are leader in digital customer experience services, leader in blockchain services, rising star in product lifecycle services, rising star in digital supply chain transformation. These are from ISG. And they also have Foolproof and One Shot. Foolproof is a subsidiary of Zensar Technologies, and Foolproof and One Shot Immersive won the most effective use of AR and VR category at the Drum Awards for the Digital Industries 2021. So they are also doing getting a lot of awards and recognitions. That's good to see. And if you look at their financial statements, so if you look at the revenue quarter over quarter, USD terms, so it's also increasing from $122 million to almost 147 billion million dollar from quarter 3 financial 2021 to quarter 3 financial 2022. If you look at the EBITDA margin, it's reducing from 20.6% in quarter 3 financial 2021 to almost 14.3% in quarter 3 financial 2022. So that's concerning. So the EBITDA margin is decreasing. But then if you look into what's happening, so yeah, they are quoting different reasons why the EBITDA margin is falling. But then they guided mid-teen EBITDA margin as a guidance for the next year. So that's not a good one. But then in the upcoming year, maybe 2024, they say it will again go to high teens. So there will be a drop for the next 1 year because of a lot of attrition. They are hiring a lot of people, and also they have to pay a lot to the employees because, as you know, now there is a talent shortage. So a lot of companies have to pay more, especially IT companies. So that's also one thing is there. But then they guided mid-teens for the next year, and then for the upcoming year after 2023, so it's going to be higher teens. That's what they guided. So that's good. So for the long-term investor, you shouldn't worry about the short-term deterioration in the margin. And if you look at the PAT margin, that's also reflected the same, like EBITDA margin reduced from 10.9% to 8.2%. That's also for the next year, it's going to see some more pain, and then it will be fine in the upcoming year. And if you look into their financial statement quarter over quarter, so then March 2019, it's about 1,057 crores sales with a net profit of 83 crores, and then it also in December 2021, it's about 1,100 crores with 91 crores as net profit. So that's their sales for every quarter. And if you look into their year over year sales, so in March 2010, their sales is 953 crores, and in March 2021, it's about 3,781 crores with a net profit of about 300 crores. So they are going pretty good growth. For example, if you look at the sales growth, it's 10 years 13%. Profit growth is also 10%. So they are doing good. In the recent years, for example, from 2017 to 2021, the growth is not that much, especially after 2019, from 3,900 crores to about 3,700 crores. That's not much, but then their net profit increased because of their margin expansion. But then now it's also reducing. The margin is reducing to about 14%, 15% range. But then it will pick up in the coming year as management guided. And then their return on equity is about 16 to 20%. And if you look at their balance sheet, so they have like 3,730 crores in their balance sheet, and then the reserves is about 2,448 crores, and their borrowings is very small, 328 crores. That's pretty small. So that's not something to be worried about. And then if you look at their cash flow statement, so they have about 858 crores from operating activity, and then 530 crores it went to investment, and then 461 crores is went in financing activity. And if you look at the net cash flow, it's still negative, so they don't have much free cash flow yet. And if you look at their analyst expectation of their growth prospect for the next year and year after, so financial 2023, it's somewhere around 5,000 to 5,200 crores, and total revenues financial 2024, the total revenue is somewhere around 5,500 to 6,000 crores, and their bottom line is about 470 crores for 2023 and 600 crores for 2024. And if you look at the shareholding pattern of the promoters, so promoter holdings is steady. And if you look at the FIIs, it's also pretty steady. And if you look at the DI, they are recently increasing. And then if you look at the FII holding, that's steady as I mentioned, and DI is also started to buying. So that's a good one. And then if you look at the mutual fund holdings in the past quarters, it's a mixed bag. November they were buying, December they were buying, January and February it's not that much of buying activity, and then in March again mutual funds are starting to buy again. If you look at some of the funds which are holding this particular company, so you have DSP Midcap, HDFC Hybrid, Nippon India, DSP Nippon India, ICICI Prudential, and then IADFC, Nippon India, HDFC. So there are a lot of big funds are holding this fund. And if you look at the previous months, for example, some of the funds reduced their position, some of the funds increased their position. So that's kind of neutral according to me, and I see a lot of funds are holding this particular company, so they have confidence in this particular company. And if you look into their valuation section, so their revenue for 2022 is about 3,900 crores. 2023, I'm expecting them to do about 5,000 crores. 2024, I'm expecting them to do about 5,750 crores with a growth of 26% for 2023 and 15% for 2024. The net income, I'm expecting them to do about 470 crores for 2023 and 580 crores for 2024 with a growth of 25% and 23%. If you look at the price target with the current valuation with a P of 21, then the 1 year price target would be 437 and 2 year price target would be 539 with a price cumulative growth of 27% and 57%. If you look at the price target with a P of 25, because they are growing about 25% in the bottom line. Even if you look at the top line, I'm expecting them to do about at least 15 to 20% in the coming years. So the demand is there, they just have to execute. So I would say they can easily do 15 to 20% for the coming years. So which means they can command a higher P, 25 to 30 even. So 25 I'm estimating with the price target of P of 25. For 1 year the price target would be 520. 2 year price target would be 642 with a price cumulative growth of 52% and 87%. So these are the my personal opinion. So you can have contradicting thoughts. It's not a financial advice. So if you ask me if the company is a buy or sell, so I would say this company is a buy because it's trading at a much lower valuation or trading at a P of 21. That's not a big one because if you see me, I'm kind of a growth plus value investor. I'm kind of a growth investor, but I will not go for much higher P names. So I kind of want growth, but also I can't kind of want value. So I'm somewhere between value and growth investor. So according to me, this company is having a good growth ahead, and then their P is not much expensive like other IT companies. So their P is 21. That's good to see. So they have a limited downside, I would say, because if they do pretty good in the next 2 3 years, so their downside is limited personally, according to me, unless something dramatic happens. So according to me, this one is a pretty good buy if you want to double your money in the next 2 3 years. This company is a pretty good for a long term hold, I would say. So that's my personal opinion. So if you like this video, please like, share and comment. And if you like a free email newsletter from this channel, please subscribe in the link below. So that's all for today, and thank you for watching and have a nice day.